As several friends and subscribers asked, today I am gonna share my Chinese A-share portfolio investment strategy. More specifically, I am gonna share my sector allocation strategy based on my study of key policy barometers such as the 5-year plan. Then given you an A-share stock recommendation which I think has strong fundamentals and is well positioned to benefit from many secular and policy cross-currents. I construct my Chinese A-share portfolio with a simple top-down approach. Alignment with policymakers is a very important if not the most important factor to consider when investing in Chinese equity. So first, I would allocate my risk exposures, not dollar exposures, to the sectors or groups which is well aligned with current policy trends in a diversified way, without getting over-concentrated in any sector or group. Then I would pick only a few stocks to invest for each sector or group by filtering with quantitative fundamental and valuation metrics and conducting deep dive fundamental researches. And lastly, I would conduct another risk control review of the portfolio, to ensure it is not overly exposed to any major factor, from a risk-weight perspective, not dollar weight. The major factors I am referred to here are just trends or events I am betting on. For example, I do not want the performance of 69% of my portfolio to hinge on whether auto OEMs will expand their supply chain in Asia, even though it is very likely. Also, I know I have mentioned the concept of risk exposure versus dollar exposure a few times. I will try to make another video to explain in more details. Now let's look at which sectors and groups I prefer at the moment. Looking ahead based on the famous 14th five-year plan, I think China is entering a period of the Great Reshuffle. Without a concrete GDP target in the 5-year plan, I think China is more than willing and probably already doing so to sacrifice some quantity of the growth for better quality and sustainability of the growth. For example, some relevant factors to consider here are social well-being and national security. Squinting at the 5-year plan, I would focus on the binding targets in the plan and the targets with the biggest incremental increases. As highlighted, I think green economy, emission control, agriculture production, and production upgrades are the key and non-negotiable themes going forward. Thus, the sectors and groups of my preference at the moment are semi, water treatment, renewable energy, EV, agriculture equipment and machineries, robotics, and automation. I would also keep a close eye on things like the publications from the central government and ministries, and make adjustments to sector allocations if needed. Again, as I mentioned in my previous video, if you have read the highlighted part of the MOE's publication on the 2021 task focuses released back in February, you shouldn't be surprised by the recent news on the Chinese education company. Now let's shift to the stock pitch. Today, I want to recommend Shanghai Kelai Mechatronics, which is a company who provides customizable automation and robotic solutions to producers and manufactures niche parts for automotive fuel and HVAC systems. Instead of going through pages of my fundamental research, I am going to give you the 3-sentence pitch as usual. 1. Kelai is well positioned to benefit from many ongoing policy and secular tailwinds. Just some examples, its end market and underlying business is in the overlapping center of several key focused areas within the 14th five-year plan as mentioned above, including emission control, electric vehicle, robotics, automation, semiconductor. 2. Other than the intrinsic high barriers of the underlying business, Kelai's deep domain expertise in auto-electronic production and proven R&D power thanks to its deep connection with top universities will ensure the ongoing competitiveness of Kelai's products. 3. Thanks to recent pullback of broad Chinese equities, my fundamental and valuation analysis shows at least a 30% upside to current price. That's it for today, thanks for watching.